Well, non-compensatory stock options. What's the intention here? The intention is to compensate employees and officers without having to pay them cash. So again, it's just to incentivize employees, incentivize people to join your company, talent to join your organization, right? So in order for a plan to be non-compensatory, it needs to follow certain criteria per US GAAP. The exercise period must be limited to a reasonable period. Okay, so that makes sense. You can't have once it's vested and once you've got those options like available, you can't just have like forever to exercise them. It's probably like a year. You have a year to use the stock option. If the plan offers stock at a discount from the market price, it cannot be greater than a reasonable offer of shares to its shareholders. So this is going to be, basically like you can't be doing anything. I'm just going to say sketchy, right? You can't do anything too sketchy. It's got to be reasonable. So definitely reasonable there. We will follow that rule. Stock is offered equally to all qualifying employees. So you can't favor one employee over another. You can't say, okay, like I like you better. You're going to get this, option better than all the other employees. All right. However, there can be a limit in the plan to the total amount of shares able to be purchased. Generally speaking, all full-time employees must be allowed to participate. There's a few exceptions here. We're not really going to get into that. Not too important. But yeah, all employees need to be able to participate. We need equality here. Everyone needs a fair share. Stock option plans that meet the requirements do not require the recognition of compensation expense by the sponsoring company. Remember, we are from the perspective of the company in this case. We are not from the perspective of the employee. The plans that do not contain these characteristics are usually classified as compensatory plans.